Well, let's take a look at Aussie. All right, so 4-hour charts. Constructive Aussie. Simple reason is frankly just the fact that we hit this trend line, right? I actually think, yeah, I've got one marked up here. All right, so go back to this high from, what was that, March 6th, 2 legs down. So you get 2 equal legs down. We just kind of ran into a little bit of a wall here right before I started this webinar. You can see the well-defined horizontal level. But yeah, I'm constructive Aussie, frankly, constructive against this low from, I guess that was just 2 days ago. You've got a lot down here. So you got the trend line, you've got 2 equal legs down, as I noted. You've also got 2022 volume weighted average price. So as you can see, this level didn't do a whole lot, wasn't all that useful. The VWAP up until really, that was a Sunday night, after Russia had invaded Ukraine. That was the 27th, and we opened on it and ripped, and we just came back and tested it the last 2 days. So I don't know, constructive here. There are much longer term charts that would warrant kind of a constructive view on Aussie, notably this one. So this is a channel, goes all the way back to the 2011 high. And the parallels within this channel, right? It's a theme that, if you read my stuff or watch these webinars, you'll notice I talk a lot about former support becoming resistance and all that stuff, and on an angle, and that's what happened, right? So this was resistance, became resistance again, and really since August of last year, it's been support. So that's an important observation. Right, so on a very long-term basis, again, this is a weekly chart. As long as you're holding this, it's okay to be constructive Aussie. You break this, then look out below. You're going like, probably mid-64s. All right, Kiwi. We just nailed resistance. This is an hour. Let's go to a 4-hour. All right, so Kiwi just hit resistance. Very short-term channel, right? It's just like last week or so. I do like Kiwi. You've got this, kind of nice little bottoming look going on here. I don't know, maybe you need to do a bunch of work on the right side if you want to make a big head and shoulders bottom. I'm not here to predict that. What I am saying is that if we rip through this, right, then watch for kind of a bullish signal, watch for support from the top side. The key level, and we've looked at this for months, is this line here. So again, this is going to be log scale, by the way, if you're drawing this at home. Connect these highs back to December 2019 high, these highs back here in the fall of 2020, and look what you get. Support, support, resistance, resistance, resistance just last week. So that is your, clearly your important level, right? Kind of stuck between a rock and a hard place with Kiwi on this. But yeah, it's been, the relationships between various asset classes has been kind of odd. I mean, has not been easy. And this is, also why I like to say that it's best to just study that market that you are trading on its own technical merit always. I mean, if you were to, look at, if I were to tell you that, the Chinese equity markets would be down where they are, you would tell me that Aussie's trading at like 40, right? Not the case. FX vol has been, pretty muted through all of this. We've picked up a bit lately, but not nearly what you would think. Okay, dollar CAD. Last week I said I have no idea, and I still have no idea. really stuck in a range, and we're doing that, you know, until we break out. From my kind of just my eye, if you will, everything since the June 2021 low, you know, really looks like a big A, and then everything since this high back in August is a big B wave triangle, right? I still think that's a distinct possibility. It does not jive, if you will, with my bearish bent on the dollar in general, but maybe that's totally wrong. And if that's the case, this might be the place to be in terms of playing a big move higher in the dollar. And again, that's not a prediction; it's just an observation, right? So A, B, C, D, E, or maybe all of this is E. Either way, you know, I'm kind of respecting this idea that we have a big triangle and that we have the possibility of bursting higher in dollar CAD as long as we hold this trend line back to the, it goes back to the low from last year, right, from last June. All right, let's go to dollar yen, which has broken out big time. So weekly chart, we looked at this last week. So we are above the trend line. That is the 1990, 1998 high, which was resistance back in 2015. Let's see where we close this week. But right now, folks, we are above that level, and we are about to tag the 2016 high, right? So if you recall, this is when Trump was elected, right here. We ripped face for like 4 or 5 weeks. We put in a big top. This could be quite a significant breakout, right? I don't want to minimize that. And what's interesting too, and I don't know, maybe we should have seen this coming, is the fact that when you had that gold rally, right? Gold was going through the roof. Typically, right, you have gold and yen trade, you know, somewhat in unison. They have historically, more times than not. And dollar yen was doing nothing. So once gold started to come off, dollar yen went bonkers on the upside. So yeah, this could be a massive breakout. That's kind of, I'll just leave it there. As far as trying to time like an entry, go to a shorter term chart here. So here is a 4-hour chart. Actually move that over. Let's go to a daily. So this is a channel. Here you go. All right, so as far as trying to time this, one, I do think you're coming into resistance again from that high in December 2016, which is what, 118.66 or something like that. But if you use this, if you draw this channel in from the low from Jan 2021, you're coming up on resistance here from this parallel, right? More in line, you know, more so in line, or more or less in line with that 118.66. But watch for support if you do get a pullback. The level to try to align with this bigger breakout, if that is what it is going to be the center line here. Okay, and you can see why. I mean, it was just resistance like a month ago. And that's going to be, I don't know, like 117.20 or so. And again, I'm not saying we pull back and then rip. I'm saying if we do pull back, that's the level where you want to get involved, at least the way I do things. You know, there'll be times when you get breakouts and you're waiting for a pullback that never happens, and it sucks. But more often than not, you do get an opportunity to join the trend or the breakout, if you will. All right, so we've gone through the majors, G7. Let's take a look at, I guess we'll look at the metals because we just kind of talked about that. So everyone got real excited about gold and silver, didn't they? Not gonna lie, I kind of did too. And frankly, I thought if we pulled back that we were going to hold this like 1920 level or so, and we did not. So what's interesting here, folks, is that this day right here, 224, terrible circle, here we go, right here, that was the day where, so Russia invaded Ukraine on the 23rd, the next day here was the trading day. We closed that day at 1904. Guess what? We just traded like 1904. So essentially through all of this, we haven't gone anywhere, believe it or not. At this point, I am an observer. I have no interest in messing around with gold. It has not held the level that it needed to, in my opinion. I will note that the 50-day average is a spot to pay attention to, especially because it coincides with the high back here in November. That's going to be 1870s. So if you get that, that might be an opportunistic spot to do something. Silver, again, just a beautiful channel going back to 13 months ago, February 2021. We broke out, and that breakout did not hold. So again, the way I do things, I can't be involved because this has failed, right? Next level to pay attention to is probably that 200-day average, which, as you can see, was pretty good support, resistance, 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 and in fact, extremely precise. And that's currently 2405. So that's the next spot to potentially do something. All right, let's take a look at indices. So NASDAQ was the chart that we looked at and focused on last week because of this line back to the November 2014 highs that connects all these highs, right? 2018, 2020, then it became support. And here we are holding up. Nice reversal yesterday. So I still stand by my call, if you want to refer to it, you know, as that, but, or my opinion, that we do work higher, potentially all the way back towards, you know, 15 twos, 15 threes. First level to pay attention to, of course, is going to be this 2022 VWAP, which this has been just a beauty all year, right? So all that is volume weighted average price. It's a moving average weighted by volume for each period, in this case, a daily chart. As you can see, it's been resistance on each little move higher. So clearly pay attention to this. Currently, it is 14,543. S&Ps. Also, real quick, so if you look at NASDAQ here, you can see how we actually cracked the lows barely. There's 224 lows. S&Ps have held up. They actually did not make new lows. So you got a little non-confirmation there. And we are quickly making our way into the big test for resistance here for S&Ps. And that's going to be the line that crosses the highs. So January and February highs. And then again, 2022 VWAP for S&Ps. And that's 43, call it 43.91. Okay. Okay. Other stuff that might be of interest, like non-dollar crosses. This is one that I think is interesting. This is Euro Aussie. This is an hourly chart. Channel off the lows. We just hit it this morning. I don't know, just an interesting spot. Me personally, I kind of stick with dollar crosses and play my opinion or view, you know, on those. And if I end up kind of in a, you know, a cross trade, like say I were long euros and short Aussie, then I am synthetically long Euro Aussie. But it's just an interesting price chart here, right? Especially given the big reversal we had, which I will show you right here. So we did have a we looked at these signals last week, but we had these are proprietary reversal signals with a volatility component and a momentum component. And we had a big reversal last week. You can see a little blue bar here. So if you look throughout Euro Aussie history, we've had some pretty good signals for this. So I don't know. Interesting spot. Dollar SEK did the same thing. Right? Dollar Swedish krona, reversal signal here. We've actually had a couple over the last 2 months. But yeah, this is kind of my objective reason, if you will, to be kind of dollar bearish at this point. But yeah, I will be paying very close attention to that dollar SEK chart, that very long-term one, the first one that we looked at. Because if you do break above that long-term median line, oh boy, look out. All righty. So I think I'm back now. It's been a pleasure. Again, FOMC here in like, I don't know, was it like 3 hours, 2.5 hours? And, you know, we'll see what happens with all of this wild geopolitical news, but, you know, try not to make your decisions based too much on the headlines. I mean, you just saw this Ukrainian-Russian peace thing come through, and what happens? Euro spikes 110.40. Now we're trading 110, right? So again, trade the charts, trade the levels, and now's a good time, I guess, for me to bring up. I will share my screen once more, but at Scandinavian Capital Markets, we are looking for trading talent. So we've revamped our, well, at this point, probably, I don't know, 6 months ago, we revamped our proprietary trading program. And if you would like to, you know, become a professional trader and trade with us, visit this page, okay? We are funding up to $2 million. There is an assessment fee, right, that you got to pass the assessment. If that happens, you get funded. There is no time constraints on making, you know, passing your assessment fee like other places. But yeah, check it out and come trade with us. So again, that's it for me today. FOMC today, good luck. Jamie Saettele here signing off with Scandinavian Capital Markets and SB Trade Desk. Take care. Bye. And now's a good time, I guess, for me to bring up. I will share my screen once more. But at Scandinavian Capital Markets, we are looking for trading talent. So we've revamped our, well, at this point, probably, I don't know, 6 months ago, we revamped our proprietary trading program. And if you would like to, you know, become a professional trader and trade with us, visit this page, okay? We are funding up to $2 million. There is an assessment fee, right, that you got to pass the assessment. If that happens, you get funded. There is no time constraints on making, you know, passing your assessment fee like other places. But yeah, check it out and come trade with us.